Australia's bank bosses tell MPs their customers are under significant strain. Qantas profits slow as the post-lockdown travel boom eases, and Berkshire Hathaway hits a $1 trillion valuation just in time for Warren Buffett's 94th birthday. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 30th of August, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Well, good morning, Michael.
Adam, the main story this morning, the boss of Australia's biggest home lender has warned politicians that its customers have experienced, quote, extreme shocks in recent times following pandemic lockdowns, rapid interest rate rises, and a surge in demand. And there's concerns that many Commonwealth Bank customers are really struggling with the cost of living.
Yes, Michael, and I think many of us can relate to this. Commonwealth Bank Chief Executive Officer Matt Comyn was in Canberra yesterday. He was appearing at the House of Representatives Economics Committee, and he said that customers aged 35 to 44, Michael, is that you?
Oh, it is me.
Okay.
I'm smack bang in the middle of this.
Right, well, pay close attention.
Go on, I'm all ears now.
Right, customers aged 35 to 44 have the largest share of mortgage balances and are exposed to higher interest rates. He added that customers in general are spending much more essentials and far less on discretionary items, and savings are being quickly depleted. Michael, can you relate to any of that?
Tick, 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 tick everywhere, all the way along there. Matt Comyn is spot on with this.
All right, well, let's see if you think this is still spot on. He also called for tax reform, focusing more on wealth taxes than income taxes to improve productivity and prosperity, but he wasn't having a single bit of Adam Bandt's Robin Hood proposal for higher corporate taxes, and we covered that on yesterday's show. He said it was, quote-unquote, insidious populism. How's that for a whack?
Oh, that is a decent whack. And as we've discussed on the Fear and Greed Weekend edition on many occasions, Adam, you are an extraordinary enthusiast for any kind of tax reform. So I can imagine you hearing Matt Comyn talking about tax reform yesterday, you would have needed a cigarette.
I think I stood and applauded. No one else was around, but I stood and applauded.
He's speaking your language, isn't he? Now, Westpac CEO Peter King was fronting the committee as well. Did he have similar reflections? Was he on the reform train as well?
Well, funnily enough, Michael, he was. And Peter King also supported tax reform, saying there was too much reliance on income taxes and insufficient focus on consumption and perhaps even wealth taxes. But he said good luck to the Parliament in terms of trying to tackle it. He understands how reform can be very, very challenging. One of the themes that both bank bosses raised over the day was concerns over scams. They are investing heavily in scam detection, but they're seeing a big problem with nefarious social media players ripping off Australians, and they want a whole of ecosystem approach that includes the tech giants and telecommunication companies.
Adam, it's just worth quickly mentioning on the topic of scams, our interview today is worth sticking around for. It is a chat with Shaq Johnson, who is the head of customer protection at ANZ, about Scams Awareness Week. It is basically about the efforts that are being made by ANZ in particular, but these are really kind of efforts made across all of the banks, and there's a great deal of cooperation between the banks on this. But the very first question that Sean put to Shaq in this interview is, who's winning? Are the scammers winning or are customers winning? And Shaq was very direct, saying, well, at the moment it is the scammers. They are winning, and really it's going to take a united effort from all of the banks and a lot more awareness from customers as well as to what to look out for, because with the advances in technology, with AI, these scams are getting so much more advanced, so much more clever, and so much more deceptive. So it is a really, really important interview to listen to. It is coming up after the show. Sorry, I interrupted you there's really a public service announcement there, Adam.
Yeah, well done, Michael, and I endorse it. And I'm absolutely thrilled to know that someone with the name Shaq Johnson is head of consumer protection at ANZ. I'm going to listen to that interview, very aware.
It's a great one.
And Michael, back to that House of Representatives Economics Committee. We also have ANZ and NAB CEOs there in Canberra for more hearings later today. And I'd encourage any listeners interested to tune into our afternoon edition, and we'll update you on any developments.
Now, checking local markets, Adam, the S&P ASX 200 closed down 0.3% yesterday to 8,045 points after a pretty rocky day of earnings, really.
Yeah, it was, Michael. And we're still over that 8,000 mark, and that's significant. The sector that performed best over the day was financials, with the banks all posting modest gains. Pretty much everything else slumped, including significant slides for energy, consumer discretionary, staples, and resources. Mineral resources was leading the decline in that space, and it was down 8%. It was a pretty flat trading day for industrials, healthcare, and information technology. Online fashion seller Satire had a tough day at the office after missing estimates and posting a 34% profit drop. Its share price fell by 20%. Perth-based miner Red 5 was one of the worst performers. It was down more than 10% after they reported a loss after tax of $5.4 million and guidance for gold sales to be below expectations in 2025. And Michael, one of the standouts for the day was Bega Cheese. It was up 10%, but Qantas and Wesfarmers had mixed results, and we'll discuss those shortly.
Yeah, we will indeed. Now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Checking international markets, Adam, and all the talk has been about NVIDIA earnings. Good results, but investors have become used to spectacular with promises of more spectacular to come.
Yeah, that's right, Michael. The NVIDIA earnings will continue to ripple across the markets as investors digest the results. Despite reporting revenues for the second quarter up 15% at $30 billion, and that's 122% up year on year, it was all about the third quarter guidance. It expects that these revenues will be around $32.5 billion, within a 2% range plus or minus. Analysts were expecting $31.9 billion on average. That's pretty close, but there were some expectations for almost $38 billion. So you can see how wide the expectation range goes. And this hasn't been the end of the frenzy on NVIDIA yet. While investors sold off the stock after the results, it's worth noting that NVIDIA stock doubled this year, and the last quarter was widely considered hugely successful. Another US tech company, Salesforce, a customer management software business, has also posted results worth mentioning. Its operating margins ended the quarter at record highs, and it flagged that its more expensive product tiers that embrace AI are helping with revenue growth at a low level. It's expecting revenues of between $37.7 billion and $38 billion over the financial year. These are massive numbers, Michael.
Yeah, they certainly are. All right, we have a lot to cover today, Adam. We'll be back in a moment with the rest of the day's business news. Adam, Qantas reported $2.08 billion in earnings for the 2023-24 financial year. And while that was down 18% over the year, there was a bit of news that will excite plenty of shareholders. The airline is due to resume paying dividends in the second half next year for the first time since 2019, when they were dropped as the pandemic sent airlines globally into turmoil.
We're talking airplanes. Did your heart just flutter?
Yes. Yes, actually, you know what? I instantly just thought, this is bad now. I associate everything with Sean Aylmer. We talk about planes and all I can picture is Sean heading off on his holiday now. And it's just like, you know when you've worked with someone too long and then like you start dreaming about them? It feels like I'm at that point now. Normally I'd get excited just about a Qantas story, and now it's ruined by the thought of Sean drinking kind of premium wines in business class. I'm assuming he flies business.
Even when he's away, you may even be finishing his sentences, Michael.
Oh, probably. We're in sync.
Let's get back to Qantas. Margins were a miss on local and offshore operations, but we all know Qantas has had some heavy lifting to do recently after a turbulent period that's left its brand in tatters. This includes spending big on adding new planes to the portfolio to help improve capacity and other customer service initiatives. The end result was a net profit of $1.25 billion, down from last year's record profit of $1.74 billion. Jetstar actually had its best results yet due to budget-conscious travellers looking for lower-cost flight options. Corporate travel has been a lift overall. International revenue is expected to slow amid more global competition, but local revenue will rise by 2 to 4% following the closure of Regional Express's capital city flights.
Air New Zealand also reported their earnings this week. Its pre-tax earnings for 2024 had more than halved, down to $222 million, as the economy over the ditch struggles.
Yes, Michael, keep your interest flying high for this one. Air New Zealand cited weaker government and corporate spending and operational issues as the reasons behind the compounding challenges. However, some of it was expected as there was a surge of activity post lockdowns that was never likely to be repeated on an ongoing basis.
Now, this is an interesting one, Adam. Triple M and hit radio station owner Southern Cross Austereo is putting its TV network up for sale and cancelling its dividend amid the advertising slowdown.
Yeah, Michael, and this subject has been discussed for some years. As we mentioned in yesterday's show, the TV ad market has been a headache for major media businesses this earnings season, with Nine also flagging challenges. Southern Cross CEO John Kelly said he'd had active negotiations to sell their 96 TV stations, with revenue across the entire business down 1% to $499.4 million and underlying profit down 49% to $11.2 million. One positive is that its digital audio platform Listener is now profitable and growing.
Now, Adam, we don't talk about Bega cheese enough on this podcast.
Oh, I agree, Michael.
Given that they are behind some of our favourite products like Vegemite, which is not really that's not really your favourite product because you can't eat Vegemite, can you?
Well, there is a gluten-free version.
Is there?
Yes, and I am a fan.
So you don't just have to eat Marmite, because Marmite was always the traditional kind of gluten-free alternative.
No, there's a special jar in the cupboard for me too, Michael.
Oh, well done, Bega cheese. Anyway, we've finally found a way to squeeze Bega cheese into the show because it was one of the top performing stocks yesterday on the ASX after swinging to a statutory profit of $30.5 million over the last financial year.
Yeah, we say three cheers for Bega cheese, Michael. Its share price is up about 50% over the last 12 months, and the turnaround is after a $230 million statutory loss in the 2023 financial year. Bega declared a dividend of 4 cents a share, bringing the total dividends to 8 cents a share. Bega customers, including those Vegemite fans, should expect to see more branded product growth.
Now, Wesfarmers has posted a 3.7% lift in profit over the financial year to around $2.56 billion. But some interesting comments from Managing Director Rob Scott. He's warned about a challenging year ahead amid slowing home building, volatile commodity prices, and significant cost of living pressures really weighing on consumers.
Michael, Wesfarmers is a fascinating company, and looking under the hood at the different brands Wesfarmers owns reveals some really interesting consumer stories. Take Kmart. It has crushed it with sales recently as its own label Anko, which is a budget line, continues to be a hit with the public and deliver solid earnings. Its sales were up 4.4%. Officeworks was up 2.3%. It also has a health division including Priceline and Silk Laser Clinic with revenues up 5.9%. Bunnings sales are up 2.3%, but there's a slowdown coming for the hardware business with growth already down a notch in the second half of last year. And that's from softening building activity as part of the story. Sales for the first 8 weeks of this fiscal year have also been slower at Kmart Group, including Target.
Yeah, Adam, we spoke last month to Gaurav Sodhi from Intelligent Investor, and we talked to him about Wesfarmers because you're right, it is a fascinating business with a lot of different components. But in particular, we talked about Kmart and the boom of the Anko home brand and about how really Kmart's turnaround has been entirely built off the back of this Anko brand, to the point that the toys that they produce, it is now like the biggest toy brand in Australia is Anko, with 40% of the country's toys are now Anko, and 20% of the clothing in Australia now carries the Anko brand name, which is staggering when you think about the bigger picture and the fact that it wasn't that long ago that Anko didn't even exist, and now it is actually reaching this point of kind of market saturation. It is a remarkable success story.
Yeah, I agree, Michael, and I understand that you and your family have done some research into Anko.
I think anyone with young kids has done plenty of research into Anko. They do actually produce some really cool toys. Anyway, it is not my self-interest driving this story. I just find it fascinating. Now, a question, Adam, and I don't know whether it's actually a question that you will be able to answer. The question is, how many Australians will be driving an electric car in 10 years' time? It is the puzzle that the energy market regulator is trying to work out. And it now thinks that it's not electric cars, but hybrid cars that Australians are more likely to flock to over the next decade.
The Australian energy market operator has slashed its forecast to 4 million electric vehicles by 2034, and that is down from 7 million that it previously estimated. It's keeping a close eye on this shift in consumer behaviour because it affects how much pressure the grid will be under. Increasingly, this signals that we favour petrol-electric hybrids here, but there are a range of experts who spoke to the Financial Review, and they warn that this could turn quickly. The dynamic could change if cheaper Chinese EV models catch on or fuel standards change. The energy regulator is alive to this, though, and has a bunch of other forecasts in mind just in case the situation doesn't pan out as expected. And that includes EVs growing to 6 million over the next decade. So our estimates were 7, down to 4, but could be 6.
So somewhere in that range. All right, international news time. China's commercial buildings are going through a bit of a makeover. One of the challenges they're experiencing is a very high commercial real estate vacancy rate as work from home kind of kicks off post-pandemic. And it's the famous Hilton Worldwide Holdings brand leading the push.
Yeah, Michael, Hilton has found an opportunity here, and according to Bloomberg, it is converting these empty and unused office buildings into hotels and taking advantage of a boom in tourism activity. It has just marked its 700th property in Greater China and is continuing to expand with plans to add another 100 to its portfolio in the region over the next few years, with about a quarter of those to come online in 18 months. As for the future of the office sector in China, it's wait and see. Right now, office vacancy rates there are around 15%.
Now, this next one, executives around the world will be watching it closely, I suspect. The founder of the messaging app Telegram, Pavel Durov, has been charged in France in relation to alleged illicit activity on the app. He's also been stopped from leaving the country.
Yeah, Michael, and I think you'd agree it's uncommon for police to aim to hold company executives personally liable for user activity on their services, but that is precisely what is happening here. There's a big debate in France at the moment about the role of technology companies and their responsibilities. Durov was detained over the weekend, so everyone expected this to escalate further. He was being investigated for complicity in managing a platform that enabled illegal transactions, as well as complicity in crimes as serious as enabling child abuse material to be distributed, as well as fraud and drug trafficking. Now, part of the concern from prosecutors has been a lack of response to requests for cooperation from Telegram when major criminal cases were brought to its attention. At the heart of the issue is the line between freedom of speech and the responsibility of the platforms to help law enforcement. According to the New York Times, this case could come with a sentence of 10 years if Durov is found responsible.
Last one, Adam. It is a very happy birthday today to Warren Buffett, legendary investor Warren Buffett, who is turning 94. And just in time for the celebrations is news that Berkshire Hathaway is now worth more than $1 trillion, joining the likes of Apple, Alphabet, Amazon, Meta, Microsoft, and Nvidia. Seeing a bit of a theme there amongst those companies to surpass the valuation.
Yeah, Michael, the Oracle of Omaha is earning his title yet again. Berkshire saw its cash and equivalents, such as US Treasury bills, surge to US $276.9 billion on June 30. There has been a big stock sale focus, with Buffett selling down more than half of its Apple shares this year. He is the 6th wealthiest person in the world right now, and this is the first time that a US company that isn't in the tech sector has reached the 13-figure milestone. Congratulations, Warren Buffett.
Yes, indeed. All right, up next is the Fear and Greed business interview. Today we're speaking with Shaq Johnson, Head of Customer Protection at ANZ, about Scams Awareness Week. It is a cracker of an interview. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget as well to check out the new episode of How Do They Afford That, which is our sister podcast that comes out every Wednesday. This week's episode was all about money myths. It is about the 10 money myths that are out there, and we bust them. We just go through work, quite kind of a logical process, 1 to 10, and just bust them one at a time. And really, I think we are quite effective in doing so, Adam.
Yeah, Michael, of course, I listened. I love listening to you and Kenna every week. And the Mythbusters episode was a cracker.
Yeah, we had fun doing it. And you can find How Do They Afford That wherever you listen to podcasts. I'll put a link in today's show notes as well. Thank you very much, Adam.
Thank you, Michael.
It is Friday, the 30th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.